Boom. We are live, ladies and gentlemen. It's good to be here again today. Nice to see Bitcoin click up into the $40,000 area, just touching the top of our supply line. So hopefully none of you got scared out during that chaotic weekend. I did my best to yell and scream as loud as I could to say that this was a huge opportunity. And we're going to be going over why that is. Here at the Arcane Bear, we have been studying WYCKOFF accumulation and distribution ranges for almost 2 years now. And they're extremely valuable and very important to understand. So as it's one of the hottest things on the topic of the YouTube channels themselves, we figured that these would be continually great areas for us to go over and deepen the discussion around these market cycles that often people get generally confused about. So here we are, we're looking at Bitcoin on the 4-hour, and as you can see, I've drawn 2 white lines and 2 corresponding green lines on the bottom of those. Now, we're going to zoom out and take a look at the daily, and we're just going to go all the way out to the weekly for a few reasons. Number one, this is our WYCKOFF accumulation and distribution area that we have been charting for well over a year and a half now. And one of the important reasons to understand that is that market cycles are usually, I guess you could say, personified by 3 key cycles, especially from the beginning to the end of the market. And most importantly, that's really my only interest. I want to know, when did the market cycle start, which was right here. This is our accumulation range. And then generally, at least if you just do cursory research on the internet, it goes accumulation and distribution. So this might make you think that the market is over, and it's not. I don't believe that it is. And there's a reason for that. So again, on the left side, I have this little red line drawn here, and this is the idealized market cycle of just 2 movements. And generally, when you're looking at it as closely as we do on a day-to-day basis, it's actually highlighted in 3 movements. It's an accumulation, an upthrust, a move into a reaccumulation, and then another final kind of blow-off moment where you finally get distribution. And then from there, you usually come back and form another reaccumulation area or accumulation, which takes years, and that's usually signified by what people call these long-term bear market cycles of around 1,000 days, in which we had to Bitcoin. So ultimately, where we are today is likely the bottom of the Bitcoin market cycle during the bear market next time, somewhere between $30,000 and $60,000. So effectively, I believe we're going to around $150,000. Maybe we go higher, but let's just be key here. So we see an accumulation. Right now, we are in a reaccumulation area, and then we're going to go up much higher, probably around $120,000, and then come back down here probably sometime in 2023, and then form a reaccumulation area between the $40,000 and $50,000 area. So ultimately, these are still one of the most amazing opportunities to buy Bitcoin, I believe, that you have at your fingertips for the next 3 to 5 years. And if we just actually go back out to the weekly chart here and take a look at that, we can see what that looked like back in 2017. So for those of you that have asked why I use linear charts instead of log charts, is because linearly speaking, I am charting within segmented time frames, and I'm not concerned about positioning in the percentage price, which is what a log chart does. I'm interested in the movement through time. That's how WYCKOFF functions most effectively. Although you can use trading ranges on the log chart, what we want to do is really highlight the importance of the nature of watching these charts take place as they are happening, not before or after, and a relevance of basically the whole market cycle itself. So here we go. So back here, you can see how this would have looked in 2017 into 2018, where you had a giant accumulation cycle take place. It was over 1,000 days approximately, 11 to 1,200 days. You had your first market cycle up into the top of the regression line. You clicked back down, and you retested this $2,000 to $3,000 area. Now, we never saw that area again in Bitcoin basically at all. But the next cycle here, this area between 4,000 and 3,600, we saw 3 times. And those represented basically the best buying opportunities that Bitcoin had to offer over the course of that 1,000-day cycle. So right now, where we are again today, I believe is basically the same validity, and the most valuable entry points you can be taking are in this little range. And so here we again, we see the similarities between this cycle, our large-scale accumulation, our first uptick, and then what is now currently turning into re-accumulation. So because of that, this area here between these 2 regression lines, just as we saw on the previous bull market cycle, is actually one of the most valuable points of entry if you were late to the markets. So yes, a lot of people are talking about how this was a distribution. It was, but it doesn't take into account the whole market macro cycles, and I think it's quite disingenuous to just focus on these shorter time frame ideals. And we can go, and we've gone over this multiple times. Back in August, while we were looking at WYCKOFF accumulation ranges, back at the very beginning of the spring, one of the most valuable parts of understanding the market cycle, there was a small scale distribution that took place here. And all it did was turn into a reaccumulation after decline. So in the middle of the market cycle, what you end up witnessing is something called a reaccumulation after decline. So if you go to arcanebear.com, if you want to sign up for our private group, again, we've been going over these WYCKOFF trading ranges for quite some time. We have all of our private content pre-made, pre-branded. Oh, let's see here. Am I not logged in? Well, that's just a whoopsie. That's a whoopsie poopsie. Anyways, I'm going to have to, I should have pre-planned that one. Hey, ladies and gentlemen. Anyways, look, one of the fun parts is maybe we can find it on the internet still. I'm going to actually have to hide, geez, I'm going to have to, while we're doing this, guys, ladies and gentlemen, go down, see all those wonderful social media platforms that you can join us at. Please be sure to give us a like at this moment and subscribe to all of those while I log in the background and fix my whoopsie so that we can look at what I believe we are witnessing right now, which is not a distribution, it's actually a reaccumulation. And again, these moments generally scare the average retail investor who's new to understanding any type of technical analysis, let alone the WYCKOFF trading ranges, which are made up, again, of usually macro market cycles that are the most readily identifiable. And probably the most important to take into account is that because of this, if you get it wrong, you might get pushed out of the market in one of the most valuable times to be here. And that, yeah, we definitely don't want. So, yeah, now it's forced me to keep my cash. Let's see here, clear cache, geez. Hopefully that works. No, it did not. Okay, so I'm gonna have to log in through the back end and open up our private PDF. Again, whoopsie, ladies and gentlemen. My website logged me out of my own damn website. That's not all that productive or helpful right now, is it, website? Jeez. Okay, so here we go. We're gonna open these up in the background. Yes, WYCKOFF accumulation after decline. Okay, boom, here we go. So this is a reaccumulation after decline, schematic 4. So again, the mid of the market is usually represented by reaccumulation cycles themselves. And this is what I think a lot of people have gotten wrong at this moment, is that they've thought that this is a distribution when in the middle of the market, that's not usually what you get. You get some type of reaccumulation after decline. So ultimately, I think what we've witnessed here is reaccumulation schematic 4. I suspect that we end up building a reaccumulation trading range between 44,000 and 29,000, and then going much higher. Now, the length of the time frame of these, again, when we're looking at a schematic like this, it is an idealized version of what the market can do. It's not like, hey, it's going to do exactly this. Although sometimes you do get these kind of picture perfect moments in distribution and accumulation. Clearly, we got that with Bitcoin during the accumulation cycle. That's why we were so bullish starting on March 11th. Here, again, what you have to remember is that this footprint of an animal out in the wild can look different. So again, I believe that we saw, here's the top part of your pattern, here's the bottom part of your pattern that's going to take place. You get what looks like to be a distribution, which is really just technically part of a much bigger frame in terms of a reaccumulation, again, because of the macro perspective of where we are in the market right now, which is that this bull market is not over. We're just started. So again, one of the important parts here to recognize is that even the midway of the the accumulation box itself took over 600 days. And you usually have a market movement equivalent of that from when you leave the box. And lo and behold, we are only 100 and basically 80 days, 210 days into this market cycle, which is not even halfway, right? So, and we can find this in other areas by going to Glassnode, using on-chain metrics. The stock to flow ratio is one way to look at this, although I think I like the stock to flow deflection model. We basically have witnessed one of the largest capitulation moments in Bitcoin's history. And notice that it's undervalued. It costs more to mine a Bitcoin than it does to buy one. So miners will not be selling until the price goes up. And the majority of the new liquidity, where does it come from? Miners. So this is a very important model to understand. And again here, just for a moment, if you think that this is correct in any way, that puts us at $1 million Bitcoin in 2025 of August, approximately, right? So the other one we like to go over is the reserve risk. this is another great way to measure the risk of being in the market at the current price. And as you can see, the last time we saw in 2017, we saw these big market cycle tests where we were only at a 0.004 reserve risk ratio. Like, we're at a great buying opportunity here right now. So if I were you guys, or at least in better sentiment, I'm just buying more Bitcoin on a day-to-day basis right now. I think that these are all fantastic entry points. I bought more when we were at the low, and I will continue to accumulate in this range because to me, this represents probably the greatest opportunity over the next 3 years to buy Bitcoin at these levels. Even if we come back down to $38,000 in the next level, great. That represents another area of accumulation for myself. So I'm very happy, very, very happy about these entries. And again, what I think we're seeing right now is a reaccumulation after decline, which is here was the first part of the decline, and here's your part of reaccumulation. And these should not be confused with distribution schematics, because that distribution in its true essence means the market is over, at least if you are measuring the market in macro cycles like I myself like to do. So again, we have had this chart drawn up for well over a year and a half now. You can go back and look at all of our videos. It has not changed. We hit the top of the regression lines. We fell right below it. And now again, if I go to my candle wicks, actually you can see it a bit more clearly, as the wicks will show a bit more of the data. But here you can see our regression lines and regression mean has worked out beautifully so far, and we're seeing an accumulation right in between these two regression lines, which is again exactly what we saw back in 2017 with a few different characteristics. I think that the accumulation area here is going to take a little bit longer than it did in 2017, just because of the amount of stupidity and leverage that's being played in this ecosystem. We usually always want to wipe it out. But understand that one of my favorite things to study here is called scale invariance, which means that no matter what time frame you look at, you're going to be able to find these micro accumulations or distributions, and that they're probably not really worth your time. So I'm just adding more to my Bitcoin positions here as well. And we've seen across the market, oh, I just closed Ethereum. Let's open that back up. By going to the S&P 500. It's Wednesday. Nice. We're still in the positive. I bet you we're going to see some downside for the next few days to test the bottom of the range in Bitcoin again here too. I suspect we will come back down to the $32,000 area. You can see that in the S&P 500 as well. More importantly, let's go back and finish where we wanted to go, was the Ethereum USD chart. So same thing with Ethereum. We've been following these WYCKOFF accumulation and distribution patterns for almost 2 years now. And lo and behold, you see almost an identical story. You see this very nice, beautiful, long accumulation zone, which is what you want, minimum of around 2 years, which we got flawlessly. We saw a break above the regression line and then a fall right back down to your second regression line of your previous automatic rallies, etc. So I believe that we are in another large scale area of reaccumulation for Ethereum as well. And these areas are usually designed to bore all of the average retail investors. So if you're new here, don't get bored. These are some of the best times to accumulate assets if you had not had the chance. Okay, Mercurial, looking great. This is one of our new venture capital plays. It looks like we're finally about to break the trading range here too. You can ignore my messy lines. It doesn't need to be perfect. If you know how to do WYCKOFF trading range, who cares? Why waste all your time? I guess I would probably look more professional if I took the time to actually draw everything. But when you've been doing them for 2 years and talking about it every day, day in and day out, I just hope that people are savvy enough to recognize this now. Here's another accumulation range taking place. I'm a big fan of Mercurial. I think they're going to do really well. I'm also a big fan of Solana. We'll go over, look, Link, again, looks like it's going to test the bottom of its trading range and make what appears to be an inverse head and shoulders at this area here, a small inverse head and shoulders. Again, this SOS in this backup phase is actually quite nice. Again, probably a little over dramatic because of how many newbie retail investors were using leverage when they should not be. This was a very dramatic drop. Picking up Link here at $18 was an absolute freaking steal. And not only that, those positions, had you jumped into them the other day when I said, look, this is one of the greatest opportunities you're going to get in this market, 100% return in less than 5 days. That is fantastic. Was hoping to see a bit more strength out of synthetics, but we were still in our falling channel. Woo, again, very similar, right off the top of our trading range, almost looks identical to Link. 1 inch has done the same, right back to the top of the trading range. Waves, Serum, all back to the trading range effectively. So Again, a lot of volatility due to the leverage that was in the system, but that's just the way the nature of the beast works. So thank you guys all for joining us. Please remember to share these videos if you like this content. If you're new and you find yourself over trading, the disease of the early investor is making all these mistakes because you have no idea what you're doing. Note that we have a group of over almost 1,000 people now that are constantly working together to grow and educate themselves. We do private webinars, we do group discussions, we try to encourage everyone to become more friendly because this is a long-term wealth generating game that you are in should you choose to play it. So remember there, if you like to try new things and are adventurous, or at least consider yourself adventurous, go down to the links arcanebear.com/private down below and sign up because it is a no risk guarantee. If you do not like our product, we will just give your money back because it's probably you or not. It's sure it's us. After all the thousands of members, it's our fault. Anyways, let's deal with the Arcane Bear. I will take a look at a few of your guys' thoughts and questions. Let's see here. We'll go to this one. I came across your channel and it's one of the best on-point streams regarding cryptos. I want your thoughts regarding the fear that is surrounding crypto and how you separate fear from facts. Fear is probably one of the most logical times to be making decisions and to ignore facts. That's a difficult one, but in the beginning of the pandemic, that was the best time to start investing. And once you really realize that, you are going to, you're going to make a lot more fucking money. That's the key to that one. MA says, for the reaccumulation zone, what do you think the spring will reach down to? That is an unimportant question because you are probably trying to get the exact point where it's the lowest, and you shouldn't be doing that. A good investor will always aggregate prices. Look at what Michael Saylor is doing. Hey, it's the 11th of the month. I'm buying another $15 million. Don't be stupid and try to play better than the people who are winning the game. Copy them and play the game the same way, and that is how you become successful. Don't try to beat the market by picking the bottom of the spring. You're probably just going to lose. Hey Tio, Michael H says, what are the odds of BTC retesting the lower level before heading back up? Yeah, again, if you're trying to get that like few percentage, you're just going to hurt yourself. It's not even really worth catching like, oh, am I going to get the bottom? I just buy day over day over day right now to aggregate the price within the reaccumulation range itself. So why fuck around trying to like get it exactly right? You're just going to end up failing. So I don't suggest you do it. Have you thought about starting a channel or doing anything related to spiritual practices with ayahuasca? We've made 1 or 2 videos about ayahuasca. This is my shaman channel. I hope to help people understand better the conversations around wealth, richness, and how to build it and characterize it the way I'm interested in doing it. But that's to each their own. We do videos like that, and we will be doing more videos like that. Santander Brooks says, what's up, fam? Are you familiar with the 4-year ROI chart? Have any thoughts on it? No, I try to keep things as simple as possible. I don't need to add extra noise into my signal when what I've been using works fucking perfectly. So I just get rid of any noise that doesn't fall within those parameters because it just makes it even harder to make up your choice on decision. Crypto Twitter is poison. I agree with this generally. Back in the days of reaccumulation was like 1 year. Reaccumulation is not 1 year. You're talking about accumulation. Accumulation cycles will take that long. In the traditional market, we've seen longer reaccumulation cycles, like with, let's say, Tesla or something. But that's in a traditional market where you already have public companies. These are very often illiquid products with small market caps. They move very quickly. We started buying Matic first at pennies and it's at like $2 now. So clearly you can't compare the traditional world to venture capital in the tech sector. It's just not even worth doing it. We love Matic. We've been investing in Matic for the last 3 years. All of our private group members have pretty much gotten into Matic in the less than 20 cent range. That's why people continue to show up and pay for our newsletters, because we're really good at our research. Or not. You can pretend we suck, but that's on you. What do you think about Cardano? I like Cardano less than Avalanche. That's my personal sentiment. Guys, for those of you that are asking the prices, you should really focus on understanding the value of an investment, because then the prices are relevant. Take my house as an example, right? If my house price were to drop 50%, I have a waterfall, private well, hundreds of fruit trees, and solar panels. You think I give a shit what the price is? No, because I understand the value. If you know what the value of something is, you generally don't care about the price, and you can think longer term. So if you're just thinking about price, you're making early newbie beginner mistakes, and you should be focusing on value, which is understanding what the fuck these things might be able to do. Once you do that, you'll be clearly a better investor, and you're going to end up going from zero to millions of dollars. Not financial advice. You can read people that have made billions of dollars by reading the book 100 Baggers. I don't know how many times I got to say that one. Or Dan Dow. Please do your homework. It'll help everyone else, yourself especially. Leo, I invested too much in my portfolio during the climb, and now I'm in a trap with a small amount of capital. So what you need to do, Leo, is understand that you made the decision to start learning how to invest by doing it incorrectly the first time. What you need to do is keep going back to work and keep making investments. Super cycle, it's bullshit. Every time we get into the market movements, people start to exacerbate prices, and it's generally a sign that we're midway and close to the end of the bull market. There will be no super cycle. The universe itself has cyclical moments in it, and there's no super cycle. You have large like arc seconds that take 72 years within the sun, and we've measured all that out. So I don't know why all of a sudden some random fucking YouTube idea about a super cycle would change that. It makes zero sense. But hey, maybe I'm wrong. Maybe the universe has been incalculably wrong, but I haven't seen it anywhere else. So I haven't seen anything be able to escape the nature of the universe either. So keep that in mind. Like, everything is in the universe still. So I would suspect that it operates under the same premise. You're wise to keep it simple. To me, none of this is worth it if it's not simple. People love to make things too complicated. And it goes back to the psyche of the markets. I agree. It's just, I remove as much noise as I can, and I focus on the things that have worked over 100 years. Zeb the Cat says, hi Tio, how do we know an asset is worth investing in the long run? Maybe we seem what having fundamentals today will be outdated in a couple of years. Sorry if my question is stupid. It's not a stupid question. This is actually a very difficult one. Warren Buffett frequently talked about not investing in things he didn't understand. Now, I understand Avalanche and I understood Bitcoin. He clearly did not. But he also invests in things like tampons because he knows that women are going to need them every month for life. Okay? So understanding the business model over time is always difficult because technology can be replaced. So what we do in venture capital is we go by the sentiment, heads I win, tails I only lose a little. So if you know that you will have a failure rate, you just limit your exposure side, understanding that if one day these could fail. Could we go to 20K according to WYCKOFF? It's very unlikely we go to 20K. It's just way too much buying pressure up here. I mean, anything can happen. We could have an asteroid hit Los Angeles and then the prices of everything would drop. Maybe we'd go to 20K then. So I'm not going to bar out the fucking absolutely random and unknown. You can't. How would you rank the following? ETH, DOT, Avalanche, Cardano, and Sol. Avalanche and Sol I put in the same category as Ethereum. Cardano and DOT are a little confusing to me. I like Charles Hoskinson, but all my friends who are tech friends don't agree. And I'm not smart enough, so I can't really say. I just listen to people who are smarter than me. I try to make my decision based off that. I'm conceptually okay at understanding. That's why I've been able to make good fundamental investments, is because I can understand the concept. Like, hey, Bitcoin is choose your own freaking money that's not governments. I'm like, yeah, I'll put my hand up for that. I can understand that concept, even though I have no clue how the tech works, technically speaking. Source says, hey, Tio, how can I connect digitally directly with you? You can join our private group, or you can email info or daniel@arcanebear.com, and if you pose the question to them and they think it's worth my time, then they'll send it to me. Come on, 20K, yeah, good luck. you're dreaming and you're just gonna miss out. Better to aggregate prices overall, everyone. Like, you'll do significantly better over time if you understand that you're not trying to go to the gym once and get ripped. You need to go all the time and over the course of a few years, and then you get the gains you're looking for. Don't be a little baby, totally fuck up because you're not understanding that you need to go frequently to the gym. Like, I'm just gonna go on like Tuesday. Tuesday is the best day because the moon is here and the Tuesdays are the cheapest days of the gym. Now you just sound like useless. Don't do that. Play the game like the big boys, and then that's how you win like the big boys. Any thoughts on Aave? We like Aave. DeFi, what are some DeFi projects apart from ADA or Avalanche? What is 100 bagger? 100 baggers! Do you guys not know what, like, clap it like, oh, I got a huge bag. Baggers. Fuckers. Why 100 beggars? The guy who wrote 100 baggers made $1 billion. There's no such thing as beggars in that world. Jesus Christ. I don't know how many times I've had to say that one, spell that one out for people. Just do the research, you'll find it, and think about it. Why the fuck would anyone call it 100 beggars? Maybe that's what you've got on your mind because you're broke and poor. Fix that shit. It's 100 bagger, baby. It's something that goes over 100x. I like the supply chain model for VET. Well, that's kind of useless because any of them could do a better job, Avalanche specifically. So why would VET stand out? Avalanche is a much better opportunity to actually close high-level conversations in the enterprise level. Adam, or Andrew, Jesus, I read your name too quickly. Andrew, I saw your message the other day, and I thank you for that. I wanted to make sure I took the time to actually respond with as much time as possible. So I'm going to read your comment out here. Thank you for your message, too. Incredibly valuable. I love how you're better at bleeping things out than I am. Incredibly valuable information here. Take the time to learn this bigger perspective. Learning it because it extends to all market cycles and all assets. Tio is a hidden gem amongst the noise. Thank you for that, Andrew. I appreciate it, and I love having you in the Bear family. So thank you. What are 3 good books to read? Dan Dow, 100 Baggers, and Reminiscence of a Stock Operator are probably 3 of my classical favorites. And hey, you know what? At this moment, why not go to your YouTube channel and click the little subscribe button? If you would like to, you can actually go to the playlist section and lo-de-do, la-di-da-da. Hey, look, there's a bunch of free ebooks I have, or audiobooks. 100 Baggers and Dan Dow are the 2 top ones. If you would like to see some of my other favorite books, they're for free still. I don't know how long these will last, so get your listening in there. Well, you can, ladies and gentlemen. So there's that. Go subscribe to the channel, check out our playlists, and you have access to some of our favorite books. What kind of volume signature would be ideal to take another dip lower than 30K? Absolutely useless question again, Brandon. If you're focused on these specific dips, it means you don't understand a good investment strategy, which is you need to aggregate prices over time. I don't know how many times I got to say that. You're not going to catch the bottom, so don't even try. Just anything within the range is effectively a good place. So quit trying to get it exactly right and understand that you're not going to. So why waste your time trying to when you can get an aggregate price just like I've been doing, which is buying every day the last 5 days. Okay, last few questions here. Bigger risk equals bigger profit? No. Bigger risk also can mean bigger loss. So no, I don't agree with that. Read Dan Dow and 100 Baggers. Both those guys have made hundreds of millions and billions of dollars. I don't know why would you take anything else. Do you have an opinion on SafeMoon? No. That's just my opinion. 0.9% of Matic on exchanges, that sounds good, doesn't it? It just means volatility, doesn't mean good or bad. It means volatility. Are you planning to make significant exits near the top of this market? I already took out a big chunk around $56,000. You can go back and look at my videos. I have a very strategic business operations plan that I've gone over countless times, which is that I take out enough capital to operate my businesses for 3 to 5 years, and I let the rest of my assets sit and keep accumulating more. Tio is a gem. I've sent lots of folks to this channel. I can't handle most of YouTubers' bullshit. Well, thanks for that, Eye of the Veda. Again, I realized I'm just never going to be super popular because of how complicated some of my thought processes are for the average thinker. I'm like a think type of person. I love reading complex books around mathematics. We have podcasts with plasma solar physicists, biologists, PhDs from all different avenues and walks of life. So currently we're not going to be super popular for that stuff, at least not right away. The Walking Vagabond says, I really liked the video about wealth the other day. It spoke to me a lot. Thanks for the amazing content. I appreciate that. I'll start doing more videos like that. I'm going to play around with this. So Ryan Joff says, is the WYCKOFF distribution phase completed and we are now in the reaccumulation phase? I think that the distribution is actually just part of a larger reaccumulation. I think that that's what people have gotten wrong, is that they've misunderstood that, yes, this small part here could look like a distribution, but ultimately it's in the middle of the market and part of a reaccumulation cycle. It's not distribution into reaccumulation. It's distribution as part of reaccumulation. They're the same fucking thing. What coins are not investing in? Oh, a shit ton, more than I am. You still going to Bali? Yes, I am. My advisors told me to sit tight for a little longer, so I'm following their advice. They're older and have made a fuck ton more money than I have. And when I say a fuck ton, I mean like a literal fuck ton. Awesome. I appreciate all your guys' support. Thank you so much. If you're new to the Bear family, please remember to subscribe. Hit that little like button. As stembold as I will ask, why not? Thank you guys all for those of you that are willing to stick around through the complex conversations about scale and variance. Like, right? How boring is that? Oh, you want me to go study advanced mathematics because of the way markets work? Just tell me we're going to the moon. That's so are we in reaccumulation phase B? We are in phase B. Yes, that is correct, as far as I can tell. Will you end with the flute? Yes. Okay, I will. I will end with the flute. Do you consider yourself a minimalist? No, I consider myself a naturalist. And I don't try to chase gains. I've done really well over my life in business, and money's not the core driver of what I believe wealth to be. I spent nice 45 minutes meditating with a beautiful woman this morning. That's my life. I got a gorgeous view of the jungle. Can you get Crypto Kirby on your show? Not a chance. I would prefer not to have people that add noise to the sector. I don't think that they're right a lot of the times. It's really easy to make conjecture about everything. I've stayed bullish since March 11th, and when the bull market is over, I will tell you I think it's over, because you'll be able to see this green light behind me start to change color, and it's closer to around 120 grand. Flute. Okay, everyone would like to hear some flute. Yeah, Crypto Kirby is a fool. I've listened to a bunch of his videos. The reason he doesn't put his face, I mean, here, just for fun, not to mock anyone, but let's go and see what the internet has to say about Crypto Kirby. Crypto Kirby review. Safe trading today. Let's see here. I believe when I looked at this, oh yeah, don't do it, not worth it, scammers. Okay, yeah, that's pretty clear. How about the next one? How about Reddit? What does Reddit have to say? I enjoyed his, I jumped in every video I messaged. It turns out it costs an extraordinary amount. Wrecked City, you guys don't know how to trade. Okay, cool. Like, okay, yeah, definitely don't trust this guy, it looks like. Okay, well, what happens when you type Arcane Bear reviews? Now, this is going to be fun. Let's see. Oh, hey, look at this, 4.6 stars. This looks great. Oh, nice. Hey, look, everyone's writing great things so far. Best course by far. A group that teaches you how to invest. T.O. Bear is awesome. Absolutely amazing. The place to learn. Oh, well, there's a big difference, isn't there? Just go type in a name and then hit reviews. Read customer reviews of arcanebear.com. Oh, this sounds great. Let's see. Oh, 4.6 stars. Great work, everybody. Whatever you want. You follow whoever you want. I don't give a shit. This is Tio with the Arcane Bear. Thank you for joining us today. Boom.